Are you familiar with breakfast products like Rice Krispie cereal, Pop-Tarts pastries, and Eggo waffles? These are all products made by Kellogg, one of America's strongest and longest standing producers of cereal, snack foods, and beverages. Hello, my name is Marc Drouinaud Jr. If you're new here, I do some related videos. I got some dividend stocks to buy as inflation soars and they pay nice percentages back to us for nothing. Haha! Alright, let's get right into it. But before we start, I wanted to go over what a dividend is and what a dividend yield is, because those words can be confusing to many people. So a dividend is when a company distributes a portion of its profits to its shareholders. As an example, if you own Microsoft stock, then you are a Microsoft shareholder. Any company that you have stock in, you are a shareholder. So for example, if you have a stock in a company that you are a shareholder in, that makes you a shareholder, and that company offers dividends, you will get portion of those of its profits through dividends. It could be quarterly or yearly. It varies from company to company. Now, what is a dividend yield? A dividend yield is the dividend of the stock divided by the price of the stock. They say good dividend yield percentages are from 2 to 6%. So basically, right, typically you will get the percentage of the money you paid to the stock each year. Now, the more the yield is relative to the stock you own in the company, the more money you get back. Okay, so we like, the greater the dividend yield is, the percentage, the more money we get back relative to the stock, right? So that's dividend and dividend yield. Now I hand selected these picks, these stocks as well, these tech stocks, because we're in inflation, right? So these stocks are, I don't want to say inflation proof, but we want to stock up on them, right? This is courtesy of Tony Dung at US Money News. Number one, we have Chevron Corp. As one of the main energy sector stocks represented in the Dow Jones Industrial Average, CVX has been a long-standing blue chip stock. Currently, the company operates global upstream oil and gas exploration segments and downstream chemical and petroleum manufacturing, products, and transportation. The company is best known by retail investors for its gas station brands such as Chevron, Texaco, and Caltex. Like XOM, CVX has been around since 1879 and has grown to more than 42,000 employees worldwide with operations around the world. CVX is up 25% year to date through July 26. The dividend yield for that is 3.8%. Now remember, good dividend yields are usually 2 to 6%. Chevron is 3.8%. Next, we have General Mills Inc., right? If you've eaten Lucky Charms cereal, Pillsbury dough, Haagen-Dazs ice cream, Tortino's pizza rolls, or Yoplait yogurt recently, you've had a General Mills product. Coming from humble beginnings in 1928 as a simple flour miller, GIS has expanded over the decades to become a staple in American kitchen pantries and grocery stores. Like many consumer staples stocks, GIS is able to maintain margins and profitability even during recessions and inflations, thanks to its ability to pass on costs to consumers. Given how essential its products are, consumer demand is likely to remain high even as household budgets tighten. GIS is up 10% in 2022 through July 26, right? And the dividend yield for that is 2.8%. Next, we have Kellogg Company. Are you familiar with breakfast products like Rice Krispie cereal, Pop-Tarts pastries, and Eggo waffles? These are all products made by Kellogg, one of America's strongest and longest standing producers of cereal, snack foods, and beverages. As a consumer staple stock, K enjoys lower than average volatility with a beta of 0.34, meaning that it is roughly 1/3 as sensitive as the overall market. In 2022, strong growth in demand for K's snack products led to an excellent earnings report for the first quarter, with net income up 15% from the same quarter a year prior. International sales were also up, offsetting a small decline in domestic revenue. The dividend yield for that is 3.2%. Next, we have Coca-Cola. When people think of KO as a company, which is Coca-Cola, they usually associate it with red cans of Coca-Cola that everybody loves. However, KO's product lineup doesn't end there. Beyond Coke, KO also sells notable brands of soft drinks like Sprite, Fanta, Minute Maid, Powerade. Ooh, they got all that. They got all that. Gold Peak Tea, Gold Peak Tea, and Glacier Vitamin Water. Man, Coke, I know y'all had all that, right? While its products might be wildly popular in the US, KO has also made significant inroads in European, South American, Middle Eastern, and Asian markets. The company has grown to over 250 bottling companies, 900 production plants, 27 million retail outlets, and 79,000 employees. KO has a strong history of consecutive dividend payouts. The dividend yield for that is 2.7%. Next, we have Marathon Petroleum Corp. The U.S. energy sector is dominated by XOM and CVX, which collectively account for around 50% of most energy sector exchange-traded funds, or ETFs. However, investors looking for less mega-cap energy stock exposure can buy MPC, which has market cap of $46 billion. MPC acts as an independent refiner that supplies gasoline and distillates to resellers and consumers. Currently, the company controls 7 refineries capable of producing 1.8 million barrels of petroleum products per day. With a beta of 1.5, MPC is more volatile than the overall market, but this has worked to its advantage in 2022 as the stock is up 37.5% year to date through July 26. The dividend yield for that is 2.6%. Next, we have ConocoPhillips. Like XOM and CVX, COP, which is ConocoPhillips, has a long-standing history that dates back to the 1870s. Founded as Continental Oil and Transportation Co. in 1875, the company eventually merged with Phillips Petroleum Company in 2002. Today, COP operates in 17 countries via 9 district business segments. Most of the company's revenues come from sales of crude oil, with natural gas coming in a close second. Recently, the company teamed up with Sempra Energy, SRE, to boost the development of liquefied natural gas facility in Port Arthur, Canada. COP is up 26.2% year to date through July 26. Now, dividend yield for that is 3.3%. Next and last is my favorite, because I see good things for this, right? Especially in the times we live in, right? We have Pfizer Inc., PFE. One of the few stocks to win during the COVID-19 pandemic was PFE, which is the Pfizer Inc., right? Now think about it. Monkeypox, we have COVID. You might want to do that. So thanks to its development of commercially viable vaccine, in general, the healthcare sector has low volatility, right? With many of its constituents, right, paying good dividends and boosting strong cash flows. Case in point, PFE management expects revenue from its Comirnaty COVID-19 vaccine to hit $32 billion by the end of 2022. As talk of a fourth COVID-19 booster shot looms and U.S. health regulators approve boosters doses of its vaccine for 5 to 11-year-olds, PFE is poised to meet its recent revenue and earnings guidance. The yield on that, the dividend yield on that is 3%. So, like I said, we got monkeypox, we have COVID-19. Hey, let me know what you think. Please feel free to watch, like, and comment other videos on this channel. Subscribe now.